Rohr here with early concise highlights on Thursday, October 9th, 2014. And we're into a phase here where there is a huge amount of macro influence on these markets starting to show up as these highly volatile swings. Well, we need to ask what all that means to the markets. And so far, again, the various communication from central banks, the Fed minutes, the Bank of England statement, took the S&P this morning from what was up 6 at 1968, so getting very near that same failure level up at 1970. It opened up into top of the week on Monday and then had such a significant sell-off from, and it's already where it is down 7 now at 1955, back to the top end of those lower critical ranges, 55 to 50, with that tolerance to the 45 area. Of course, in this case, the most recent down break, the upward channel from last Thursday's trading low down at 1918, was broken on the way down, going back to Wednesday at 1948. So it'll be interesting initially to see, well, in addition to 45, does it get back below 48 and then 45? That might set it off on the next swing back toward the 1920 area, and we shall see. The most interesting part of the fact the market is now lower this morning, even if it tries to rally later today, is that the hourly MACD never escaped its upper runaway band, even in spite of the sharpness of the push up yesterday. But so far, this market is conforming to our broad swinging trading view, and that is that the supports are variously down into 1920 to 18, with the bigger support down around 1900, give or take a few dollars, and the resistances are going to be initially back up in the 1950 to 55, but with extended resistance at 1970, and again back up in the 1975 to 78. And that pretty much does it for the short-term view of the S&P 500.